us Mayank Shah. He's the category head at Parle Products, and Ankur Bisen from Technopak Advisors joining in on the show right now. Gentlemen, morning. Good to have you both on the show, Mayank as well as Ankur. Mayank, if I could just start off with you, taking a leaf from what my colleague was just highlighting. Finally, some relief for consumers as FMCG companies are now beginning to take price cuts. But do you think this is going to drive volumes for companies?
Yeah, we are very optimistic about volumes going up, and I think some correction in prices is going to provide respite to consumers. Palm has come down significantly, and as a result of that, I think there are some corrections which are happening across FMCG products. In fact, even we have reduced prices in our bigger packs by almost about 10 to 15%. We are passing them through discounts on those packs, and we have seen demand of those packs. So we have seen improvement in demand. We've seen growth being driven by those particular packs where we have given those discounts. So we are pretty optimistic that the price correction that's happening in certain products and certain packs will definitely drive demand.
Okay, Mayank, so you pointed out that you too have taken price cuts to the tune of 10 to 15%, but what's your initial assessment of the impact it's had on demand? Is the volume picking up in single digits? It's in double digit? Could you directly help us?
Yeah, so volume anyways was growing. In fact, we were seeing good demand coming in, both from urban as well as rural India. This we feel would further catalyze, demand, or would probably further spruce up demand. And our belief is that, especially rural India, which was driving growth and which was, driving demand, would probably react very positively to this price cut. So prior to the price cuts that we took of about 10 to 15% in bigger packs, we were seeing about 7 to 8% growth. Post which we are looking at currently, we've seen that the growth is to the tune of about 10 to 11%.
Okay. Let's get in a word then, Ankur, from you in terms of how you're looking at the overall demand outlook now in light of these price cuts that have been taken, given the fact that demand in rural areas has been subdued for quite a few of these FMCG players. How do you see this bringing back the overall rural demand?
Yeah, no, there are two parts to the rural demand. One is inflation-led, which was reflected in the price increases that the FMCG companies took, and that impacted the volumes. But the second aspect of the rural demand is the affordability per se, or the income profile or income available, money available for people to spend. Now, both were impacted. So while price cuts can be taken, and that can surely induce volume growth to some extent for companies, and that also becomes a category to category play and a company to company play. So players like Parle, players like HUL, deeply penetrated and rely in rural on certain hero products and hero SKUs. Surely volume growth will happen. But as far as overall rural is concerned, whether these price cuts can suddenly change the rural profile of their ability to buy more, which was the case in volume growth year on year for the last 5-6 years, that still needs to be investigated. So I think more data needs to come in for the second half of the year to say that how sustainable the rural volume growth is. So I'll continue to remain skeptical about the quantum of volume growth that these price cuts can offer.
But Ankur, having said that, do you see more price cuts coming in the offing? Because commodity prices cooling off seems like it's a trend and not an aberration that we've seen.
Yeah, so as far as FMCG is concerned, there are two aspects to it. One is palm oil, and the second aspect is the crude oil. So palm oil surely has corrected, and that may impact overall volume growth. And surely price cuts can happen because the extent of palm oil's contribution in raw material is very high. As far as crude oil is concerned, because that in turn has impact on packaging and other elements that go into FMCG, supply chain, logistics, that continue to stay firm. I'm not saying that they've corrected as sharply as palm oil. And then there are certain other elements that contribute to the overall raw material profile of the FMCG sector. So if I take a blended view of all the raw materials that are playing out, I think it's still some way to go to say that further price cuts can be implemented. Also, FMCG companies realize that volume growth had suffered for the price cut that they've taken. So it is possible that FMCG companies may look at trading off margins for volume growth, because volume growth was really a struggle for the last 1 year. And I think going forward, given the profile of rural in their overall growth story, they may compromise margins a bit for the volume growth to not to be compromised. So I think that's the way I think the commentary may shape up in the next half of the year.
We have the big FMCG player with us. Mayank, you help us understand this. Are you looking at offering more price cuts, or have you passed on the big chunk of the softness in the commodity prices already?
Partly what Ankur just touched upon, that while palm is down significantly, crude is not down so significantly. I think, there's not so significant correction in crude. And while, for other FMCG products, like let's say personal care and all, it makes a difference. It doesn't make much difference to food products, because the significant part of cost is typically your grains and cereals. So if I talk about biscuits or bakery items, wheat happens to be, one of the significant inputs which is going up. So if you look at the wheat prices, they are up by about, 15 to 20% in last few months. So is the case with sugar. Sugar also has started, going up, and that's also up by 10 to 15%. Now, both this are a significant part of cost when it comes to food companies. So, when we talk about food companies, they have limited bandwidth to further reduce cost. And I think, whatever best they can do, they've already done. So going forward, a lot would depend on how this commodities play out. So if we don't see any correction happening in those two commodities, we are not very sure whether, there can be any further price cuts or not. For further price cuts to happen, I think, this two commodities also should be going down, which, if we talk about currently, they're up by about 15 to 20% in last few months. And if you look at the contribution to the total cost, they are two significant commodities: wheat flour, or rather wheat, if you say, and sugar.
That'll be contingent on wheat and sugar prices. But man, give us a sense as to how online and D2C channels have performed so far, and what kind of potential growth you're seeing from these channels.
Online has been doing very well. So post-pandemic, I think, in pandemic, we saw very good growth of online channels, and they have been able to sustain that growth. In fact, even as we speak, although the growth rate has tapered, but on that huge jump of, from probably 1% contribution or less than 1% contribution to FMCG sales, the e-commerce segment currently contributes to almost about 3% of the total FMCG sales. And on that robust growth of almost about 2x, 3x, we are further seeing growth of about at least 25-30% every month. So I think, as far as online channels are concerned, there is momentum out there, and we would continue seeing, growth in those channels. As far as D2C is concerned, I think it's a mixed bag. Very few players have been really able to, work around their D2C strategy. I think what's currently a major concern out there is the last mile delivery cost. As long as that remains, I think, it would be difficult for any FMCG player to really be successful in D2C channel. The last mile delivery cost is something that's a challenge. The cost of last mile delivery is a challenge ahead of almost any FMCG player who tries to go down D2C path.
And Ankur, just before we let you go, wanted to understand from you as well, in terms of the various segments, which is doing well, which is not doing well. Are you seeing some sort of down trading? Are larger packs doing better than smaller packs? Some sort of insight into the internals as well?
This question is for me.
Yes, Ankur.
Sorry, I missed the. Okay, yeah. Surely. So there is surely a rural and urban narrative playing out. And urban, we are seeing most of the categories and most of the brands operating within the categories, talking about what they say is pre-COVID levels performance, and in some cases outsmarting the pre-COVID level performance. So be it apparel, footwear, accessories, all those categories, predominantly metro play, predominantly urban play. They are all positive about how the sales have bounced, and they continue to remain positive. Wherever the the demand mix has a semi-urban, rural in their portfolio, their growth continues to remain a challenge, or let's say the recovery continues to remain a challenge. Food services in certain sectors have bounced back. Certain brands have done well. Brands in food services are posting best ever quarters ever, or best ever months as they quote. So food services in urban has done well. So these are categories which are, so I would say that urban discretionary, urban aspiration is done well. But where the moment you go into a semi-urban mix and a rural mix, that's where brands continue to face challenges. As far as channels are concerned, all channels are doing well. Traditional retail continues to dominate the space, and a good trend has happened is the transition in traditional retail to digital. Today, even Kirana stores are doing 20-30% of deliveries through WhatsApp or through direct deliveries, and that is sort of allowed them to become resilient or make a transformation towards digital enabled commerce. We are seeing brick retail also doing well. E-commerce is done well as well. Marketplaces induced demand is high. Omnichannel induced demand is high. But as far as B2C is concerned, it's again a mixed bag. I'll concur to what Mayank has said. Because B2C has reached a scale where pure e-commerce can't give you scale that you want. You would have to develop multi-channel for the scale to go beyond what you have reached. So people and companies are trying to sort of implement those models, and I think that's a fair bit of journey to happen in that segment. But that's overall the summary of how the demand is shaping up.
Absolutely. Mayank, Ankur, both of you, thank you so much for taking the time out and joining in today with all that insight.